Ever since I started trading, I've traded the market open due to it being the most volatile part of the trading day, with huge price movements and regular V-shaped patterns in which to take advantage of. So why after 15 months of trading have I now packed it all in and started to concentrate on the quieter, less volatile parts of the day? Many reasons, so let's find out. I trade futures such as the Dow Jones and the Nasdaq and have traded the first half hour of the market open each day for over a year now. There's always a huge influx of volume at the open, and if you trade in the right direction, you can make a big amount of profit. Of course, if you trade in the wrong direction, you can lose a lot too. That's why if you trade at this time, it's advised to have a strategy. For example, more often than not, a V-shaped pattern will form on the chart, and you can identify this and trade the formation. But getting this right can be incredibly difficult, and a lot of the time it comes down to guesswork and luck. Let's have a look at a quick example. This was a trade I made the other day at the open of the Dow Jones. You can see the price has shot up at the open and tested this area here at 34,625. The second candle can't seem to budge past it, and we've got two wicks both at the same height. Now it's just made a new high, but there's not a lot of buying pressure here, and it's not breaking through by much. Now if the third candle doesn't hold its opening price, then that's where I'll look to take a short position. And it turns red straight away, and that's where I'll go short with 12 contracts with no stop loss, but I've put a take profit order in of 17 points because the price moves so quick sometimes you can miss taking your profits, and it stops us from being greedy. And there it barges right through my take profit, and I kind of wish I hadn't had a take profit order in there, as it dropped down quite considerably and I could have taken a lot more, but that's greed for you. So that was £225 at the open of the Dow, a fairly straightforward concept of shorting the top of the spike. And if you want to have a look at the broker that I use, then there's a link in the description for you. Now let's have a look a few minutes later and see how trading this concept can go wrong. So after it dropped down, it picked back up again, thus not creating a typical inverted V-shape after all. But we're back at this resistance level again, so we could assume that this would be a good point to go short again. And I went in a bit early there. I didn't really wait long enough for the top of the resistance to be tested, but luckily it has touched that level and fallen back down again. Now my mental stop loss is going to be just over the top of that wick here, and I have another take profit order of 17 points set here for just past halfway down the previous candle. And watch as it just misses the take profit order and bounces back up again. Bloody typical. And I quickly cut the trade as it shoots off. Now don't ask me why I had a take profit order in for 17 points and not 15. I've no idea, and I would have won that trade if it had been 15 points. Now I have had a reasonable amount of success trading the opens like this, but I've always found it to be incredibly stressful and dangerous, purely down to the fact that the market is so intensely volatile at this time, and it makes for a very unsettling trading environment, which can be very scary and quite a detriment to the old blood pressure. FOMO can also really take hold at the open. When you see the price shooting up and up and up and you think, oh my god, go long, go long, go long. And as soon as you go long, the price reverses and drops back down and never comes back up again. As well, when you trade the open, you can't really put a stop loss in because the price swings back and forth so much that you just get stopped out almost instantly. So you have to have a manual stop loss. And I'm not the best at closing a losing trade manually. And so usually I just hold on and pray for it to come back in my favor. And of course it never usually does, and quite frankly, this is playing roulette. This isn't trading, and I'm sick of it. So I've recently started trading with an account size of 1.5k, and I'm now trading with a new strategy that doesn't involve trading the first couple of hours of the market open. Instead, I trade at any other time of the day. This in itself is brilliant, as I don't have to commit to trading at the same time every day. If I'm out, I don't have to rush to get home for 2:30. All of that stress is gone. If I'm out all day, then I can just trade at night, as futures are open for 23 hours of the day during the week. So whatever your lifestyle, you can always find time to trade this strategy. So that's brilliant for starters. And the markets are much less volatile a couple of hours after the open and in the morning before the open. So it's a much calmer and easier time to trade. It is far less stressful, and you can actually use your brain and look at support and resistance levels and make strategic decisions as opposed to flailing around at the open and hoping for the best. Bear in mind, the markets are also very volatile at the end of the trading session between 8 and 9 PM, so best to avoid those times too. So what does this new strategy involve? Well, it's nothing new. It's all just based on support and resistance levels, or supply and demand zones. during the quieter hours. The most important thing you'll need to do is to look to the left and see where the price has already been and identify certain levels where it is tested and retested, creating areas of support and resistance. Now, if you'd like to see an in-depth explanation on support and resistance, check out my video all about it by clicking this up here. So let's have a look at a live trade using this new strategy. Let me tell you first of all how much less stressed I am feeling now I'm not trading the opens. It is a complete game changer. Right, this is the Dow, or the Wall Street 30 as it's called in my broker. And if we zoom out and look at where the price has been, we can see that from around 8:30 a.m. this morning up until now at 11:30 a.m, the price has been fairly sideways moving with a steady zigzag up and down. Now, this is perfect for us, and it makes it easy to identify support and resistance and where to place our entries and exits. So the first very obvious level of support is at the bottom of all these dips here, and the resistance at the top of the peaks here. Now, I've literally just missed a great opportunity to go long here, as the price has come all the way down to the support and has just bounced off it. I want to place an entry as near to the line as possible to be in the best position. So as this has moved off already, I'll have to wait for the next opportunity. And patience is key here. So we'll just watch and see what happens. Now it's looking like it's respecting another level of resistance here. So we'll draw in another line where it touches all the peaks here. And watch how the price bounces to and fro between these lines. So when it comes back to my support level, I'll get ready to go long. And we've had a nice big drop there, so that's where I'll go in for a long position with 3 contracts. My stop is 15 points away and my take profit is 20 points away, which you can see here with these dotted lines. The price respects the support level and bounces back up nicely, hitting my take profit with no problem at all, taking £60. Now if we spin on a bit, we can see how the candles have not been able to push past this line here. And it also looks like it's respecting another support level. So I'll just move this line up to here underneath all these wicks. And a few minutes later, it breaks this support and starts heading down. So the big question is, where is it going to stop and reverse? Well, if we look back over here, we can see where the price went to its lowest support level of the morning, which is around here. And so I'll put in a line here. Now let's see if it respects it. And as if by magic, that candle has touched and bounced off it, creating a big long wick. Now if it comes back again to test it once more, I'll see about possibly going long. And it does come back down again, but I'm a bit hesitant to jump in just yet, so I'll watch it a little longer just to be sure. And it's come back for a third touch, really strengthening this support level now. And so that's where I'll go in for a long position this time with 4 contracts and the same stop and take profit. Now there's a big gap to fill to get back to where it was up here. So you could widen your take profit to that first resistance level if you felt brave enough, but I wasn't, and I kept my take profit where it was. And luckily it worked out and I took £80. So this is just a quick example of how a few obvious support and resistance levels can help us to know where and when to place a trade in the quieter hours of the day. And remember to look at the longer time frames as well, such as the 15 minutes and the hourly, to see where the major levels of support and resistance are and draw them onto your chart as well. So this is why I don't trade the market open anymore. This way of trading is way more manageable and slower paced, and I can do it at any time of the day or night. And of course, make sure you practice it in demo first, and try to avoid the times around the open from about 1:30 to 4 p.m. and the close between 8 and 9 p.m. UK time, as these times are extremely volatile. Now remember, it doesn't always work out, so always use a stop loss, and you've also got to have a good idea of how price action goes hand in hand with this, and one of my next videos will be all about that, so be sure to subscribe to the channel. Don't forget to give us a like if you found any of this any use. Thanks for watching, and I'll see you next time.